Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we made it to the end of the week. What's going on in the stock market today? Well, we started off with a big down day, but we pulled back up to the flat line. This market just doesn't want to go down. We had the earnings announcements from Apple, from Google, from Amazon. They all missed, and we started off lower, and now we're back to the flat line. Look at. Let's talk about January. Now, January is an incredible month so far, right? They just came out with the jobs number. We added 500,000 jobs just in January. The unemployment rate went from 3.6% down to 3.4%. Look at the stock market in January. Look at the SPY, the S&P, it's up about 10%. The NASDAQ's up about 20%. This is like incredible. This is like the best January I've ever seen. Well, we're in February now, and I think this is going to come to an abrupt end. Now, I'll be the first to admit that this short squeeze has taken the market a lot higher than I thought it would go. I still believe the market's going to come down. Now, there's a lot of people that believe this is a new bull market, and from the looks of it, my goodness, it might be. I'm not ruling that out. This could be a new bull market, but I think this is a bear market rally, a short squeeze. I think we'll come down to the December lows. I think we'll take those out. I think we'll come down to the October lows and take those out. Now, it may not play out right away, may play out later today. I don't know. But that's my take on the market. Now, a lot of people, almost everybody, they believe that the Federal Reserve has navigated this soft landing. We got a soft landing, right? Everything's great. Inflation's under control. Matter of fact, Jerome came out and said we have disinflation. Now, a lot of people are confusing disinflation with deflation. You see, deflation means prices are actually going down. Disinflation means that prices are still going up, but they're not going up as fast as they were. Now, they're really celebrating. They're taking this victory lap. Now, I don't quite see a time to take that victory lap. I really don't, but maybe I've got it wrong. Maybe it is a new bull market. Maybe everything is great. Maybe all these jobs that are created. Now, where are these jobs created? See, I live in Silicon Valley, and in Silicon Valley, a lot of people are out of work. A lot of my friends have lost their jobs. I mean, they're looking for work. They're out there looking for work. Now, I know they could go to Chipotle. They could get that burrito job, but they are in the high-tech industry. They're used to making $200,000-$300,000 a year. They don't want to work for minimum wage. Matter of fact, they can't afford to work for minimum wage because they'd have to sell their homes. They'd have to put their houses on the market. Now, let's move over to the housing market. Okay, so the housing market. Now, I've been calling for a 50% crash. Now, maybe I got it all wrong. Maybe the soft landing will just continue up higher, right? Well, that's not my take. I think 50% may be a conservative estimate. Now, why do I say that? Well, let's take a look at Canada, right? Let's take a look at Toronto. Now, Toronto's already down 30-40% in many areas of Toronto, and this decline's just getting started. But Mike, that's Canada. That's not the United States. Canada, Canada's got a 2-year ban on foreigners buying property. That's why they're going down. Canada doesn't have the 30-year loan. They're not all locked in at 3% like we're all locked in. Nobody's going to sell in the United States. That's just Canada. Okay, all right, I agree with that. Look, in the United States, we're only down about 12% so far. 12%. Now, how do we get down to 50%? And why do I think we're going to? Well, let's take a look at the iBuyers. All right, the iBuyers, things like Open Door, things like OfferPad, things like Redfin, Zillow. These were the iBuyers, right? And now the iBuyers, they're selling their properties 20 to 30% off already. Okay, and we're going to come back and talk a little bit about the iBuyers here. They're discounting their properties. discounting them deeply. Now, what about the home builders? Well, the home builders, new homes, they're already down about 20%. They're discounting properties also. All right, so let's take a look at the home build. Well, let's take a look at the iBuyers first. All right, so the iBuyers. All right, let's take a look at Open Door. Open Door, you know, is like the best performing stock this year. Their stock at the beginning of the year, you can buy all you want to do for $1. Now, just yesterday, I think it hit $3. So it tripled. Just this year, you turn $1 into $3. It's booming, right? It's in a good business. But you see, a lot of them don't realize that they're dumping inventory. They're dumping inventory onto the market. And some of the inventory, they're not even dumping it yet. They're keeping the house vacant because they don't want to crash the market. Now, a lot of homes are vacant right now. 15 million vacant homes in the United States. They're holding these properties off the market. But what about the ones they're putting on the markets? Well, a lot of them are selling at deep discounts, 20, 30% off already. Okay, I heard one in Vegas. Okay, they bought this, like Open Door bought it for like $600,000, right? And they wanted to flip it. So they wanted to go to $650. So they put it on the market at $650 so they could make a little bit of money. Well, it didn't sell. Didn't sell. Guess what? It's down from $600,000 down to $500,000 down to now $480. $120,000 from what they paid at $600,000. Let me think. Well, that's exactly 20% up. But here's the problem. It's not sold yet. It's just sitting there. And this is common. This is common in the Phoenix area, the Vegas area, in Texas. A lot of this is just common. This is the iBuyers. See, they have inventory. Now, Redfin, now Zillow got completely out of the iBuying business, right? They just said, look, we got a bad business model. We lost $1 billion. We're waving the white flag. We're not going to do it anymore. We can't, our algorithms can't price homes accurately to make the iBuyer program work. So they got out of it, right? Now, Redfin, they got into the market a little bit. $350 million, that's not a big number, $350 million worth of properties that they bought, but they're selling them all now. They're getting out. They don't want it anymore. Now you got OfferPad and you got, Open Door. Well, they're down. Their purchases are down 50% from what they were a year ago. They pretty much slowed down the buying, because why buy when you're just losing money on each one you buy, right? So they're not really buying many anymore. And the ones they have, they put them on the marketplace right now. They have a business model that I wish the home sellers that I work with would take. All right, so they put it on the marketplace. If it doesn't sell this week, they reduce the price by 2% next week. If it doesn't sell that week, they reduce the price by 2% again. If it doesn't sell that week, they reduce the price by 2% again. They keep reducing the price by 2% a week, 8% a month until the house sells. Now, a lot of home sellers need to incorporate this into their home selling process, but they sitting on the market wanting to get what Billy Bob got, because everybody loves what Billy Bob got. He got out at the top, right? But they're dumping the price. See, they're not emotionally attached to Billy Bob. They don't care about Billy Bob. A lot of home sellers, though, they care a lot about Billy Bob. They want to get what he got. But these iBuyers, they're unemotional. They just put the house on the market and they drop it and they drop it and they drop it and they drop it until it sells. And like the new homes do the same thing. You see, new homes have short-term financing, right? The home builders are financed on short-term. They got to sell it to get their cash back so they can continue to build in another project, in another area. Now, home builders, this is surprising to me. Home builders, in my opinion, should be in a lot of pain. They're dropping the house prices by 20% already, and they're having up to 70% cancellations of purchases. But yet their stocks are like at record highs. Lennar Homes, like 2% off the record high. Toll Brothers, 2% off from the record high. Stocks are going up in this, this short squeeze in the market. It's squeezing those home builder stocks. Maybe it's time to start thinking about shorting those. I am not short those yet, but I'm looking at them. It's possible. But what I'm saying is they have a business model where they get out. They're smart. They're unattached to the outcome, and they drop it to the price that the market will bear. A lot of sellers won't do that. They want to get what Billy Bob got. But the home home builders, they will drop it down to the price. Now, okay. Here's one thing I want to talk about. All right, so the iBuyers, they came into the marketplace to disrupt the industry. They were the big disruptor. Now I'm a real estate broker, and I'm supposed to be worried because these iBuyers came in, right? And they're going to disrupt it. They're going to take away my job. Well, a lot of them are going out of business. I'm not worried about losing my job. If I do, that's fine. I sell houses. But they were going to disrupt the industry because, well, they had the better business model. People don't like to pay commissions. Look at when I sell a house, I don't like to pay commissions. When you sell a house, you don't like to pay commissions. They want to get rid of the real estate agent. And now just recently, just last month, there was a lawsuit against the National Association of Realtors. You see, when I list a house, the seller actually pays the buyer agent commission. And there's a lawsuit against the NAR that this should be illegal, having the seller pay for the buyer's agent. The buyer should have to pay for that if they want to pay for that. And the NAR actually won the lawsuit, and they say we can still have the seller pay the buyer's agent commission. Now, I don't know if you're familiar with real estate, but it's traditionally about 3% each side. When you list your house, the traditional rate would be 6%. Now, it's totally negotiable. People don't get that. It's totally, you can negotiate whatever you want. This is America. But typically, traditionally, about 3% a side. So $1 million house, $60,000 in real estate agent fees. Now $30,000 to the seller side, $30,000 to the buyer side. Now it sounds like a lot of money, right? Well, it is when you're a broker like me. I like getting $30,000, but a lot of people aren't a broker. They're just an agent that works for a broker, so they split that with the broker. The agent gets $15,000, the broker gets $15,000. Well, this is all how traditionally it works, but these technology companies, they want to disrupt this industry so bad. They want to replace the real estate broker. Now, here's the thing. Look, if you're a seller, you have the option to sell the house yourself. Now, why don't you do that? Well, you don't do that. Most people end up listing with an agent. 90% of people that try to sell it themselves do end up listing with an agent because they can't get the job done, right? Because they don't get anybody to come and show their house. When you list it with an agent, we put it on the MLS and we pay that buyer agent to come and bring us the buyer. And this is traditionally how it's done. Now, if you got a better way for it to work, do let me know. But they want to replace the real estate agent. Here's why the real estate agent's not going away. Look, you can have this app, right? You can have this app and punch in what you want. But there's a big process to selling a home. You can have that app all you want and people can see it online. You can put it on Zillow, you can put it on, realtor.com and people can come and look at it, but it doesn't sell because no one's representing the other buyer. And when it does sell, it falls out of escrow because, once again, the buyers, they get cold feet when they don't have an agent holding their hand. You'd be surprised what real estate agents have to do with first-time buyers. First-time buyers are petrified. I mean, the contracts are thick. They've been going through those without an agent is scary. And when you're selling your house, the disclosures get you in so much trouble. I mean, it's a book now. It is a book what you have to disclose to people. It's incredible what you have to disclose, but a lot of people, if you do those disclosures wrong, guess what happens when that buyer gets unhappy? He's going to come and sue you. Now, you see, you want those real estate agents to protect you because they will sue the agent instead of you because agents are always in trouble, right? But anyways, these iBuyers, they came in, they're going to disrupt the industry. All these tech firms, these tech companies, they want to disrupt the industry. Everybody wants to get rid of Tall Mike's job. I'm a real estate broker. Look, if you got a better way to do this, you let me know. But here's the thing. Commissions are negotiable. When you're talking to your agent, go, hey, look, I know it's traditional 6%, but let's do 4%. Let's do 1% to you, maybe 1.5% to you, and 2.5% to have them bring the buyer in. And maybe that works. You save 2% right there. Okay. But you do need the two sides. You do need representation each side. Look, I won't even represent both sides. They want the agents now to do dual agency and get rid of the buyer agent so we represent both sides. Well, that's just stupid. That's like going to court and having the lawyer for the other guy represent you also. It doesn't work. People think that selling a house is simple. It's not that simple. Look I joke about it. We cash big commission checks, drive around in the fancy cars, and we do nothing. That's what the public perception is. Not true. It doesn't work that way. You need to keep the real estate agent in place, but you're always free to go the FSBO route, the for sale by owner, and sell it yourself. But these iBuyers, they had the idea they're going to disrupt the industry. Didn't work out so well for them. Anyways, I got a little carried away today, but it's Friday, everybody. Get out there. Have a great weekend. You like the stuff? Give me the thumbs up. Punch the subscribe button. I want to talk to you again next week. Bye-bye now.